editor at the Casey International Speculator. Thank you for joining me.
Happy to be here.
Good. So when we spoke last at VRIC, it was right when Goldcorp had acquired Probe Mines. Since then, we've seen even more M&A activity in the gold space. So is that going to be a trend in 2015?
Well, I think the context that's important to remember is that the year before, there was the even bigger deal with a Cisco. And so if you look on a dollars to dollars basis, it looks like we're behind last year. But if you take out that mega deal, we're actually on par. And I think that's good news. We'd like to see a surge, but the market isn't surging. So if we're seeing the same level of activity, sounds big deal, that's good. The big news, of course, was the Rio Alto takeover by Tahoe. I'm happy to say we were long on that one, so we made money for our readers on that one. We're very happy with that. Short answer to your question, yes, I think we will see more. I think we'll see at least as much as last year, maybe more, because the bigger companies have to eat up the little companies or they become small themselves.
Right, okay. Do you have any tips for investors who are looking to identify takeover targets?
Yeah, there's the adage of multi-million ounce. You need to be big enough to interest the majors, but the majors aren't the only buyers. There are mid-tiers out there, and so an alternative figure that people should remember is at least 100,000 ounces a year of gold equivalent. It's not always gold, of course, but 100,000 ounces a year is enough to be of interest to almost any larger company. And another important thing is to look at not just the asset being bought, but the district potential. Is it scalable upwards for the larger company? And then, of course, political risk is very hot these days.
Right. Okay, so on a related note, you said in a recent article that people who are looking for takeover targets don't really need to be concerned about whether the gold price has bottomed out or not. Can you explain why that is?
Well, the reason is because when a larger company makes an offer for a smaller one, it usually comes with a premium. So if you're buying a stock hoping that gold will go up and that will make your money, you may have to wait a while. But if you're buying a stock that's already sold off, but it has a valuable asset that might be taken over, you could get a takeover offer like with Rio that comes at a nice premium whether or not gold has gone up. And that really does happen.
Okay. So all that said, I believe you have said that you think gold has bottomed. But are we still a ways away from a real recovery?
That's a tough one, but I'll stand by the bottom call. And I think a particular thing for people to remember, because there are new calls, if it breaks below 1100, it's, down to 700 or whatever the number of the day is. But the last time in November, when it breached its previous low, everybody was saying, oh, this is it, it's going to be the end of the world. But it didn't. It went down and it came right back up again. So I'm seeing sort of a dragging along the bottom. And if that's really the worst case scenario, at 1,200 plus or minus gold, there are good mines out there that make a lot of money. $1,200 an ounce. 10 years ago, we would be saying, wow, that's great. That's a dream come true. So for the better operators, we don't need gold to go nuts. We can deal with the price that we have now.
Okay. So what catalyst might spur gold to go upwards? I've been hearing a lot about the potential impact of global crises, but I'm imagining they wouldn't do much to sustain a price rise.
Right. Yeah, we've seen that. Like when Ukraine heated up, you would see a little bit of a blip in gold, but then the moment it cooled off again and come back again, it giveth and taketh away. I don't know that there really needs to be a crisis. Obviously, if there's a big blow-up in tensions in Eastern Europe with the Russians and the NATO allies, or in the Middle East, there's clearly potential for something big. But absent that, I think, drag along the bottom until low prices are the cure for low prices, like Rick likes to say, The reality is that the big companies have cut back on their exploration projects. The juniors are all tightening their belts, or some are going out of business. Exploration has been dialed back, and mining is a depleting activity. You have to have new discoveries, or you'll go out of business.
Right.
So whether or not there's a big catalyst, at some point, the economic realities assert themselves and things come back. But on top of that, you do have that potential for something big to make things pop. And that's one reason not to remain short. You want to stay in the market because you never know. Tomorrow we could wake up, read something in the papers, and gold could go gonzo.
Right. Okay, that's all good to know. Well, thank you for joining me today. And I'm Charlotte McLeod with Resource Investing News.